We're just this week, interestingly, seeing the Russell 2000 and NASDAQ turning bearish, giving bearish readings. And so usually when that happens, the others will follow. And so I would say if you have, anyone that's heavily into stocks, they would want to be careful right now and start lightening up or just getting out, because it looks like we could be in for a steep downward correction.
This week's specials with Miles Franklin Precious Metal Investments. 2022 Silver Eagles for only $8.45 over spot. 2022 Silver Krugerrands for only $3.79 over spot. Extra fine $20 Liberties for $139 above the spot price of 1 ounce of gold. And $20 St. Gaudens gold coins, almost uncirculated, for $149 above the spot price of 1 ounce of gold, and brilliant uncirculated for $169 over.
Call us at 1-888-81-LIBERTY. That's 1-888-815-4237.
Welcome back to Liberty and Finance. We're delighted to have these returning guests. Pamela and Pamela Aden are the founders of the Aden Forecast. They've been a trusted sounding board on financial analysis and markets for over 40 years from their home base in Costa Rica. They're joining us here together with my wife, Melody, on Liberty and Finance this Friday, January 21st, 2022. Pamela and Marianne, thanks for coming back on Liberty and Finance.
Yes, welcome. We're so glad to have you back.
It's a pleasure to be here.
We found out about you and met you because of your appearance as guest speakers at the Sprott 2020 Natural Resource Symposium. And the invitees to that symposium as speakers are by invitation only. They can't just sign up and get on the speakers list. But you were there because of your long reputation and trustworthy guidance that you've demonstrated over the years. Most people don't realize that you were innovators in charting and automated computerization of charting, and that you've been doing that for a long time through the Aden Forecast. And we've got some questions that were submitted from viewers. We'll add a few of our own to follow up and dig a little deeper on some of them. But a lot of the questions are surrounding a couple things you've talked to us about in the past. The first is the presence and emergence of persistent inflation. And the second is this gold super cycle, I think, that you talked about before. You'll correct the terminology when we get there if I said it wrong. But we wanted to start asking some specific viewers' questions and some of our own in both of those areas, and to get your insights.
Yeah. One of the first questions is from Ted, and he's asking, it appears your August 2021 prediction of inflation not being transitory was correct. What is your current outlook for inflation?
Well, we think it's going to last probably much longer than what most people think. And there's several reasons for that. The main reason being the massive easy money that was created following the pandemic, during and after. And so the Fed's balance sheet just soared. And, people blame it on different things, but it's really, all that excess money is what creates inflation, which is what we're now seeing. So, you can blame it on this or that, or the supply chain problem. That just aggravates it. But inflation is here, and we think it's here to stay for a good while. And what's interesting is this man that we follow, his name is John Williams at Shadow Stats is the name of his letter.
Right. We've interviewed John Williams numerous times on our channel directly about why his numbers for the truth around inflation differ from what he calls the headline numbers are that are released by the government.
Right. That's what's so interesting. He does it the way they used to always do it, until all of a sudden, several decades ago, they wanted to not make it look as bad as it was in reality.
No, they started switching around, like 10% of it is meat, so much as wheat. And then they switch that around. So much as the metals, like in the commodity sector, they would switch the percentages,
make adjustments,
and not tell anybody.
But anyway, they do.
Yeah, but it wasn't widely known, really.
Not at first, but now, people know that there are adjustments made to the inflation numbers that we get every month. But what's interesting with his latest is where he comes out that real inflation, calculated the way it was before, is over 15% right now. And that's even greater than it was at the 1980 peak. So that's a huge deal.
Yeah, and then, but the unusual thing, of course, as we all know, but it's nice to bring it up again, is that we are in the same situation of inflation, but we're with the totally opposite end of the interest rates curve. Like then we had all those high rates and negative yields, even though they were high, and now we have very negative yields, like -6-7%, and extremely low rates. So that is even worse. So that right there is it's a very important difference,
Right.
Because they don't have much cushion to work with, and like they had in those days. So this is what we'll see how it develops this year. This year is actually a very Fed year, even though they all seem to be, but this even more so because of this reason with interest rates rising this year, and you can see already what it's doing to the stock market. And the debt, like we're already seeing like the short end, like 2-year yields going way up, which we haven't seen in how many years. That itself is very telling. And even the T-bill rate that's still way down there, it's rising too. So these, like if you see the Fed fund rate rise, it's really going to be telling. So there's a lot to be told what the interest rates are doing this year. And it looks like the Fed will not be so quick to continue raising rates.
That's one of the questions that we wanted to follow up with, was what historical examples of inflation most closely match our current path in your view. You two have studied inflation and finances and currencies and markets for a long time, for decades, and charting and watching for patterns. So you just made a reference back to the peak inflation of the late 70s, early 80s. Do you think that that's a close analog? Are there any lessons learned from that time?
The inflation itself is similar. But like Pam said, the difference is that in those days, they ramped up the interest rates,
Paul Volcker.
The Fed chief at the time, up to 20%. This time, because of the amount of massive debt that's been created, there is no way they could push rates up, even I would say not even to 5%. So that's the big difference. So does that mean if they can't raise rates because they're limited in what they can do, does that mean inflation just keeps on going because there's nothing to bring it down except for maybe other tools they could use, like they're already tapering down on their bond buying, but do they just reverse that? Those are things to be seen, and it's going to be interesting to see the differences.
It's going to be very interesting, and it may start right now in March, according to what many say. And so we'll see how it goes. They'll probably do very soft. They'll be very soft. I think they're going to tread on it for a while, and you could still say enough to say it goes down, but how much? Very little. They're still going to be adding to the economy, billions a week. So it's still a lot of money that's still going to be coming into the economy. It's just a little bit less. We'll have to see how it tapers. But that transitory inflation, though, just to bring that back a little bit, the fact that we can't get that supply chain going and everyone's frustrated about it and they're worrying about toilet paper again. It's just insane that this is, and it's all coming from a lot of it through China. So you just hear different companies that they just can't get products. You don't even see them in the grocery store. You probably noticed there isn't items that you're used to seeing everything. And that's from the supply chain. And then there's still all the ships that are out in the water, which is strange. But yeah, that has not really gone down much.
And given all of that, another question kind of with the inflation is like, how do you foresee the inflation? Will we experience, how will we experience the effect for the ordinary investor and family? And I was reading somewhere that, And I'm not saying you should stock up, but it looks like, laundry detergent's going to be going up and some of our health and beauty things are going to be going up. So, it might pay for some of us to stock up on a few things so that we're not paying the higher price coming March and April, which is, I think, was the prediction. And what do you see maybe we might want to stock up? I mean, obviously you can't stock up on fruits and vegetables for very long because they will go bad. But what are some things that we might want to stock up so that we can save some money now and not spend it later?
Well, that's kind of hard for us to say what, because there's a lot of products that can't be completed without some of the foreign ingredients in the base. And so it could be that they have some, but not all. And the companies are all different. But what it does seem like it might be, if you can't depend on China like we've been for the last decades, it's going to have to come back home and start having more factories in the U.S. and so that they can get rid of that supply problem. So that looks like that could be around the corner. No, a big corner.
But eventually.
Yeah, not right away.
But I think to answer your question, food items, grocery store items, things you buy when you go do your weekly shopping, they're all going to be more expensive. Meat, you're already seeing it. Meat, chicken, vegetables, and of course, gas prices are going to go much higher.
And also your basic resources, like all your metals, all your supplies for construction, home improvements, those are going up. They already have been going up, and they rose a lot this past year, the resource sector. And we think that uranium has a big upside potential because it's in the clean energy, and it's going to be very much consumed. So we think that's a great investment for investors. But this is what all the green energy is bringing in is that. And so it'll be can never replace crude oil, but I could put a dent there.
Just following up on the question that Melody was asking about how it affects not only families, and you mentioned that, but also investors. What do investors need to be thinking of differently in a high inflation environment?
Well, gold, of course, it's already finally starting to take off. And we think, it was taking its time, but gold, silver, the shares, those are all going to be very good investments looking out to the years just ahead. And we've been recommending gold for some time, and it was just kind of taking its time. But we think now with the moves we've just seen this past week in gold and silver and the shares, they're really looking very good.
Very undervalued.
That's right. They're super undervalued, and they look like they have strong upside potential.
Yeah, just looking at them from a value standpoint, like the shares have never been more, they're on sale. They're on the red sale, whatever you call sale, but they're on sale, and they are at bargain prices for a buy and hold, for an investor looking out for the next several years, and get ones that pay some dividends would be very much nicer. And same with the resources, like the big ones. You could go on the big ones like BHP Billiton, that's been having a nice comeback. And there's several uranium shares, and we like copper shares like McMoran that moves closely to copper. Excuse me. And we recommend several. And also, if you want to take advantage of the upcoming infrastructure plan, that they're going to be using a lot of these materials and at higher prices. So then you want to buy some of those companies that will benefit from that, like Caterpillar, like Cleveland-Cliffs, and those are ones we're liking, and like the gold shares. Certain gold shares are like Newmont, if you want to stay in the U.S. or North America, and but we like several gold shares, silver shares, and so that's kind of how we're looking at it. Even platinum's looking better, and a lot of people are giving up on all the precious metals, but we think they didn't turn bearish. They just went sideways. So if that's not horrible, it's just after seeing the stock market rising, it looks very uninviting. But the stock market is now finally having its correction. And another thing that's interesting is Bitcoin. We noticed that since last December, October, November, it started moving like the resource sector. And it started reacting to the Fed more rather than before it was just all wild. between wild swings and on their own swings. And now we see that we're following that because it looks like they're moving a little more in tune with the regular market. And so I don't know what that means, but but we're looking at maybe if it starts falling down to 30 or even 20,000, it would be a good pickup there. So that's just for a little sideline. It's not such a sideline for a lot of people. But
I just wanted to add the one thing that is very important probably for a lot of your listeners, and is that the stock market looks like it's been carving out a major top, and now it's been showing some real vulnerability in the last couple months, primarily due to these rising interest rates, but also just because the bull market's mature. It's been going on for 12 years, 13 years, and it's just time for a good-sized downward correction. So we're just this week, interestingly, seeing the Russell 2000 and NASDAQ turning bearish, giving bearish readings. And so usually when that happens, the others will follow. And so I would say if you have, anyone that's heavily into stocks, they would want to be careful right now and start lightening up or just getting out, because it looks like we could be in for a steep downward correction.
I think this leads into a question from our viewer, Ted Park, again, who said, given the current inflationary economic and market conditions, is it better to increase precious metal holdings, or are there stock market choices that have a chance for significant gains? And I guess I'll just tag on to that a lot of clients who've been calling have been concerned that if there was a major retraction in the major stock markets, that they would wonder, should they have been sitting on the sidelines, or are there ones that you mentioned, these metal shares and so on, that may be on sale already? So if people are just feeling a little bit like on the fence about this and looking for an understanding of what your perspective is on whether they should be, sitting there in metals, holding on some of the metal shares, or are there other actual stock shares that are decent values at this point?
Well, there is a good value.
Usually when the stock market goes down, it takes everything with it. When you have a big decline, a bear market, for example. But the utilities, they do well. They can swim against the tide. But generally speaking, you're almost better to be on the sidelines, with the exception of the metals, the metal shares.
There's utilities too. We think that in fact, when you compare the utilities to the industrials, it's saying buy utilities and sell the industrials on a ratio relative strength basis. And this is like not casual, but it takes time to turn around. But it's saying that that's the upcoming trend. So we do we were looking inside what makes up the utility index and seeing what looks better in there. But yeah, we're thinking that's a good one as something else that's in, because we do like bonds, even though they've fallen a lot, but we like them and the long-term bonds. And
for the long term.
Yeah. And so we could still see some rocky roads like in the next few months, but by the end of the year, we think things are going to really be cleared up on what the path really is. And a lot has to do with the Fed and how they're going to do their tapering and how they're going to make the people feel about it, right?
I think they want to do what they can, but they're limited. Their hands are tied in a way where they can't do as much as they would like to do. So that's what we'll have to see how that goes.
And last year, kind of tying into this as far as holding on to your gold, last year you declared that gold was in a super cycle. And do you still see that super cycle for gold to be intact? And I think last year you mentioned too that there might be some good buys and then it would go up again. And do you see that happening too, that it'll fluctuate and things like that? And let's see, so why do you think we're still in a super cycle if we are? And what do you look for in the next years, in the few years for gold? And or silver too.
Yeah, well, silver, once the bull market heats up, it'll outperform gold. So it has more potential, just that alone. But yeah, we follow a very interesting, it's like really interesting, and it never fails. Well, but every 11 years, there's peaks, and every 8 years there's lows. So we had the last 8-year low, just to give you an example of the big picture, was in 2015. And so this is getting close right now this year to the 7 to 8 year. So we think that low is coming up this year sometime, probably on the second half. And not that it has to have a new low, but before the real bull market gets really, like, we already think 2018 started it, like 2015 did, but 2018 kind of got stronger going, and it's still there. It's still holding up there. So it's really hasn't been bad, just hasn't been super. But it looks like that will change, like certainly going into next year and like the second half of this year. And we still can have those intermediate moves like you were talking about. Those we follow too. And right now we're in an intermediate rise as of this week. And we've been waiting for this rise a few months. But it's coming. And it looks like this could be a nice intermediate rise that kind of is telling about how firm the bull really is. So we're looking at could test the old highs for right now and over the next few months. But then we're going to see some downtime and up until it really takes off. Because when they take off in this one particular part of the intermediate moves. And that's where we're in now. And so the next one probably is the one that'll really take off. Just
for the years ahead.
Yeah.
Like for the next few years.
Like I was kind of jumping from short, medium, long term, but long term is buy on during any kind of weakness this year if you don't want to buy right now. And there's going to be time probably to continue buying the values, but we don't think you'll be sorry.
In these markets that you guys have been following for 40 years and tracking and charting and looking for patterns and cycles and all that, there are market forces that are based on the rules of science or nature or math that people would expect to find. But then there's other influences that happen. Some of those influences are human in nature, human cause. One of the questions from a viewer here, One Punch, and says, what are your thoughts on insider trading in Congress and politicians? So in other words, if this is not a level playing field, we've got retail investors who are trying to follow your insights based on the data, but there are other people who have a different level of access to data. Over the years, you've gained a lot of exposure to different scenarios like that. What are your observations about the effects or the impacts on insider trading, both from Congress and from politicians?
There is insider trading. It does affect the market, but that's what's interesting. For example, when we were talking about those cyclical ups and downs, you'll often see that happen. It'll push it down. But cyclically, it was kind of, not that it's right on schedule, but it was due for some weakness. But then the major trend, the mega trend, as we call it, which is the bull that's going to last for several years, it usually always comes out on top. It will overpower whatever insiders are trying to keep it down or trying to do things to manipulate the market. And that usually just kind of falls by the wayside, and the major super trend takes over.
Yeah, but I'd like to add, though, say they have been enjoying this bull especially even since the low of 2020, but for the many years now. So they've gotten comfortable with this never-ending rise and all the liquidity that makes more people have more money in their pocket. And so all that was adding to the extra oomph in the bull market, especially since March 2020. And it had that last leg up. But it's now into what's normal for a long bull market to last, going back like 40 or 50 years. And this is right in that. It's a very interesting chart. It shows you that this is a likely time for it to be turning around and having at least, say, a 20% correction or so. Not necessarily a full-on bull market, although it can happen. But yeah, like Marianne said, the force is stronger than the insiders. And but the insiders do, especially when the bull is strong, it definitely influences the speculation side. And I say speculation, but that strong rise, yeah.
One more question we haven't asked. We've asked a lot of specific questions about inflation and about the precious metals. But what do you consider, the two of you together, to be your current most pressing thing that's got your attention, that's really got you riveted right now, that maybe you weren't expecting and that you're looking at closely in your current research?
Well, I'm watching closely, of course, inflation, but also what's happening with Russia and the Ukraine, because right there, it seems pretty obvious that Russia is going to go in. And if it does, that could really send all of the markets into a tailspin or a strong up move. In the case of gold, it could push up the price of oil. It could affect a lot of markets in different ways. I think it'll put downward pressure on stocks. And those are kind of the wild cards that you had mentioned. Sometimes these unexpected human events happen, and they usually will stimulate the trend that's in motion. So that's what we're watching, that one closely for now. But there's a lot of things going on.
A lot of uncertainty.
Uncertainty.
Yeah, and with the pandemic and all the division of vaccines, and it's got so politicized. And so everybody is just so at each other's throat. And it needs to, I don't know if it's going to calm down, because the more you see the uncertainty in this whole pandemic, the worse it gets. And so hopefully that'll go away. But that is in itself a wild card when people start talking about a civil war and what leads to that. Have you seen the historians talk about that? You know, they're saying this happens like there's a stepping thing. And so that kind of was never in anyone's mind, far from it, a couple of years ago. And now it's on a lot of people's mind. So that is something that could be a huge wild card. So we realize there's a lot of uncertainty. So we try to be flexible and kind of watch it all and how it affects the markets. So yes, we're just telling you what we see now, but we know there's a lot of uncertainty out there. And so we can get a wild card we're not even thinking about yet.
Right.
And it can just kind of hit you in the face. I still remember in 2007 when we started, my son was living up in the northern area that was mainly affected by the U.S., like it was more U.S. prone to ups and downs. And so he called up and said, I still remember in July of 2007, he said, "What's subprime?" Yeah, he said, everyone's yelling subprime and running back home. And sure enough, that's when then 2008, of course. And but it was already noticeable here, because the people that were involved, like a Lehman Brothers or people that were here that worked from here, and they all ran back, and all they were doing is shouting subprime. So that was kind of that was that wild card in those days, big one. And so something like that could come up. It could be debt driven. It can be. There's so many uncertainties today beyond the normal that, and there's a lot of agitation that makes it even more uncertain. So we're watching it. We're kind of watching it all.
Yeah.
Our viewers may have heard this story before, but very, very briefly, when you mentioned Lehman Brothers, people may not realize, and we didn't in 2007, 2008, 2009, that we were vulnerable to these kind of systemic stresses in the brokerage relationships and that sort of thing. We had been wanting to take an extremely conservative and cautious posture. So we told our brokerage firm we wanted to sell all of our stocks. We wanted to move into a money market fund. So we had just cash equivalent, like 1 to 2 day access to our funds, and be over on the side while still earning a little bit of interest rate. And that's where we were. And then we got a communication from our brokerage company saying, until further notice, you will not have access to your funds in your account. And we called up and said, what are you talking about? And they said, well, after the Lehman Brothers collapse, the fund that you were invested in got damaged. We said, no, we weren't invested in Lehman Brothers. We weren't invested in anything. We were just on a cash equivalent money market fund. They said, yeah, but your money market fund, the way that it makes money so that it can pay you your little interest rate, was it invested in Lehman Brothers. And so now they've been collaterally damaged. And so you don't have access to your funds. And then this water torture started of every few months. They'd say, okay, now you can have access to 50% of your funds, and now you can get another 20%. So it never got all the way back up. This was Well, this was back in 2009. And so every year when they call me up and say, hey, we noticed you haven't been trading a lot of stocks recently. Is there anything we can do for you? I always say, yeah, could I give me my money back? And they always say, is there anything else I could do for you? So people may believe that they've protected themselves, but they're still exposed.
Right.
That's exactly a perfect example of that kind of ricochet effect that you hear subprime. You never would think it's going to affect you because, well, you don't have a subprime loan and you don't have a house that's mortgaged or whatever it may be. But there is that ricochet, and it's that's the kind of stuff that no one can really plan for.
Yeah, it's a domino effect. And that you were in it, we didn't know that. That's terrible.
No, it's terrible. And it's happened to millions of people, so you've got to you just have to watch everything.
Yeah. Then you see the Bernie Madoffs that came out of that. And like when the tide goes down, as they say.
Right. So if people want to find out more about the Aden forecast and get plugged into your regular publications, how can they get connected with you?
Oh, thank you. Well, AdenForecast.com is our website. And if they'd like to write us, we'll be happy to answer. Mine is paden@AdenForecast.com or info@AdenForecast.com. So there's several ones you can pick from. Info will go to customer service. Paden will go to me. So
no, and if they write, we'll be happy to send them our latest issue.
Of course, we'll send them the latest issue so they can see it. We just finished it about a week ago.
See if they like it.
Wonderful. That's wonderful. And thank you, ladies, for coming on. This was such a delight to be able to interview you guys again. This was wonderful.
Well, thank
Always
you so much.
Pleasure.
It's a great pleasure for us.
Great. Awesome.
So many of us find these financial markets and the intricacies and the complexity and the interdependencies are just so bewildering that to have people who've had decades of experience watching how things play out and seeing the forest for the trees, beyond the trees, is really helpful to a lot of us because a lot of us have been walking into trees.
Very painful.
So thank you for helping us see our way ahead here.
We're all in the forest.
Thank you.
Take care.
Take care.
Thank you so much for having us.
Yeah, thank you.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.